So the next story is actually all Clayton. Let me go back here. The next story is about Robinhood stocks. And you know something? I got a watch list of these stocks already set up for you, bro.
Look at you, Glenn.
I got you. So take it away. This is actually Clayton's submission for one of the stories today. And I'm going to turn it over to him. Rock and roll, bro.
All right, excellent. Glenn, thank you so much. Yeah, Robinhood, as I don't know if all of you know in here, but Robinhood is loved by millennials. There is zero commission, and a lot of brand new investors get started by using Robinhood. And right off the bat, we can see a lot of the headlines just bullet marked here. S&P 500 historic rally driven by investors ignoring risk. You know who likes to ignore risk? Brand new investors. Investing platform Robinhood reached 13 million accounts in May, and down a little bit lower in the story. I don't know if we're going to cover this whole thing right now, or if I'll just summarize what's down below.
Just take the bullet points, and then I'll get you into your watch list.
All right, excellent. So, yeah, 13 million accounts now in May. That's up from 10 million accounts at the end of last year. So Robinhood's added 3 million accounts just so far this year. And Robinhood users are making risky buys like Hertz. And then there hasn't been this much euphoria in the stock market since the 2002 dot-com bubble. So what does this mean? We've got brand new investors entering the stock market. It's almost like they're entering blind. Glenn, I'm sorry, I don't know the average. I don't know your audience too well, but if we do have kids or if we've got grandkids in the market, one of the easiest things we can tell them to do is educate themselves. If they're just going out and buying a stock because we see a news article that says this stock is cheap, or because we see a news article that says this stock is going up right now, you know, I'm going to equate that to nothing more than investing and just jumping on a bandwagon blind. So if we just go back and we take a look at this article lists 10 stocks down below, but if we can just jump back, I think this is the program down here.
Yep. Go over to all the way to the left. Yep. And then scroll down the list. You got one with your name behind it.
All right, cool. So if we jump into this watch list here, we can see the 10 stocks that they said were most bought. I think it might have been over the recent week. And what do we see right here? You know, right off the bat, I mean, today's a down day, yes. Glenn touched on at the beginning. Market was down, 2-3% today. But look at these stocks right here. Almost, 15 to 20% average that these stocks are down today. That's inherently they're risky. I think we got 3 airlines in here, and I hope I'm pronouncing this right, but Nikola Motors wants to be a Tesla competitor. And we've got a few other stocks in here like Hertz Global. You know, you see Hertz, and I'll just pull up a quick graph of this. But Glenn, you may have touched on it before in some Trending Thursdays. I'm not exactly sure.
All right, let it go. I got you.
Okay.
I
don't know why I got stuck. But yeah, Hertz Global, guys. And Robinhood, that article actually had a graph on there that shows the relationship between the price of Hertz and then how many new investors have that holding in their account. And I think it was somewhere around 3,000 people were holding Hertz around here. And as the price went down, it started to go up. And now 142,000 accounts, or 142,000 accounts as of when the article was released, were holding Hertz. So, you know, these are brand new investors that are buying a stock that they think looks cheap. Of course, if you see this stock trading around $1 a share, when only a few months ago it was trading at $20 a share, if you're not analyzing it and you're not looking at the risk that lies within, you're thinking, okay, well, I buy it for $1. All it's got to do is go back to where it was 3 months ago, and I've made 20 times my money. And you could do this. You could look at all of the graphs on here with all the airlines that have come down and so forth. You know, we're looking at stocks. Hopefully, Glenn, is this going to close out the graph, or is this
just the graph? You're good.
Yeah, and if we go back and we look at a lot of these stocks, relative value, Nikola's a brand new company, at least in the VectorVest program, so relative value is still low here, and it's trading way over value. I think we got the value at $6, and it's trading at $60 a share. But that's what you're going to get with new companies and with a lot of people jumping into them because of a new technology. like the electric fuel cells and the electric vehicles and the fuel cells that they have, people are going to be interested in it. But airlines, Gush, I had a friend who, as Gush kept going lower and lower and lower, and more stories were coming out about demand in oil falling and supply rising, what did he want to do? He got into Gush. And as it went down a little bit more, and Gush used to be a 3 times leveraged ETF. So unfortunately for him, he bought Gush as a 3 times leveraged ETF, held it down, losing 3 times margin essentially. And I don't know if he still holds it or not, but if he does, now as a 2 times leveraged ETF, it's got to go up, that much more just to get back to where it was at. And guys, I'll let you go ahead and graph all of these if you have time to do so, but it's the same story over and over. Tops, I wouldn't touch Tops with as long a pole as I could hold. Tops is exactly like dry ships, and I don't know if you guys know anything about dry ships, but you can see the headlines that surround Tops. All they keep doing is issuing new share after new share after new share and just diluting investors and bringing the stock price down. So without looking at any of this information, you see a cheap stock, you say, hey, 1 month ago it was worth 10, 20 times this amount. I'm basically going to buy my lottery ticket and just hope for the best.
Oh, sorry about that. I got to fix that. I closed the program. Joey couldn't find the mouse. Oh, boy. That goes for me. I just typed the boo.
You're good.
How could you got it on there?
I don't know what you did.
I'm just saying,
Wow. Are you still there, Clay?
No, I'm still here. Yeah, we'll just go down in this article real quick and show you what it looked like. But yeah, this is a graph showing as the S&P 500 went down, the new amount of users and Robinhood users taking positions in the S&P 500. So what is this showing? This shows that these new users, they're looking for deals, they want to make quick dollars, and they're willing to take on risk, even though they might not understand that risk.
Just take the whole thing over there.
And then we've got a little, we've got the 10 stocks that were in that watch list here, and then here's what I was talking about with the price of Hertz. As Hertz comes down, and then the amount of new investors that are jumping in. Like this little spike here at the very end, we can see, I can't read these numbers here, but it looks like an extra 40,000 people jumped in and began to hold Hertz just because they didn't want to miss out on getting a deal.
And I'm going to throw in there that they filed for bankruptcy on May 22nd.
Yeah,
they did
absolutely.
file for, and I'm sitting back and I'm going, who the heck is going to invest in a company that just filed for bankruptcy? That's kind of crazy. But
yeah, somebody who doesn't know that they filed for bankruptcy. Nobody's reading these articles. They're not doing their research, and they just see a cheap stock.
All right, and I think that it's stories like this that Clayton brought up that make the difference in a brand new investor making money and not making money. All right, and this is what Clayton brings to the table. These are stocks that are out there, and people are going, whoa, yay. We looked at every single one of those stocks in the watch list. They look like this. Just like a bear. That was a bear market watch list. And if they're trying to make money, they ain't doing it because they're going to get knocked out trying to play that watch list of stocks.
Exactly.
All right, so thank you for that. And that was Clayton's story that he brought to the table, and I think that is a true story for a lot of the brand new people that are getting into the market. This is what they see, and then this is what they go with because they don't know any better. Again, this is why you need to send your people over to Clayton. Clayton's going to put a lot of these misnomers to bed and get people on the right side, especially if they're new investors in the market, get them on the right side so that they don't get caught out there with these traps. A lot of these are traps. They're just traps.
Absolutely, Glenn. And a few new investors might get lucky. They may have bought Hertz down here and they may have sold when Hertz went up, 4 times over the last few days, and they may have made some money. But you know what happens when they try to do it again? They're going to get burnt that time. So excellent if they got in and they got out and they made some money, but now it's time to make some informed decisions. It's time to make some VectorVest informed decisions and invest, not just buy something and hope that you get a 10 times return on your gain, or 10 times return on your investment.
All right, with that, thank you for that, Clayton. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.